Hello, investors, and welcome back. Let's take a look at a stock. This one's called SFIX. It is ticker symbol SFIX, and I want to tell you what not to do when you're looking at YouTube videos. Do your own due diligence. Make sure that you're watching a channel where they're doing their research. I want to show you the research that goes into looking into a stock. I want to show you how long it should take and why most people don't do it. It's easier just to pull up the headlines, throw in a ticker, read the last article, and take someone else's advice. These are some of the critical things that you should make time. You've worked hard for your money. I would recommend doing at least the following. We're going to go through it in this video. This is not a recommended buy, but I do want to tell you why this would get on someone's radar and explain to you why I think there's too much risk. Number one, you do not want to buy stocks leading up to earnings unless you have the absolute conviction that it's going to go up. Hopefully you're already in the play at a low price. You want to wait and confirm your thesis and see what's going to happen. So if you want to be lowest risk possible, and that's what I do on this channel, I talk about how to mitigate risk. I want to get you in at the lowest price possible, and I also believe in doing a lot of research. One last thing is check out the comments below for a MooMoo account, and you can get up to 5 free stocks. I think that this is the best deal right now. You can see everything consolidated here, the filings. You get level 2 data for free. Typically, you have to pay for this. You get your news reports, quotes. You get all your key indicators, financial estimates down here. You can also trade in different markets. You get extended hours from 4 to 8 p.m. I think that this is a great deal. You only have to deposit $1. My background was in corporate audit, then I was in the military, so I like looking at business processes. I've done this globally all over the world. Let's get straight into the video. First thing you should be doing, you should actually be looking at a chart with candlesticks. So in your YouTube video that you're watching or doing your own due diligence, you want to get familiar with support and resistance because you shouldn't just buy any price, right? You want to come in here and you want to get the best price possible, and you're going to want to understand when was the earnings, what is the track record, how has this been responding from a technical analysis standpoint. So that's the first thing, right? And I love to use the RSI indicator just to show from algorithms that are out there, where is support and resistance? Where is this going to test and then come back down? I like to get familiar with the charts. Hopefully you've got a few stocks that you're looking at and you're doing that due diligence. You're looking at the charts frequently. The next thing I want to do is I want to go straight to the last press releases. What's been released in the last week since the last quarter happened? What all has come out? And there were a few things that really stood out to me here. Not only did they replace or put in a new chief technology officer, and this is going to be really important once you understand what the business does. So this is a retail clothing business. You know, they ship out products that are customized to you, and every time you go onto their platform, they have basically a package that's tailored to your preferences, given your feedback. So I would think that their website design, and their interaction with customers is high on the tech side. So they even use science. So typically when you hear the word science, it's like, oh, you got me. Sounds great. Sign me up. The next thing I look at is, they did a share repurchase of $150 million. This is really important because this might send off some bells of potential insider buying that might be misconstrued by the general population, retail investors. So insider buying is probably going to show up and it's going to be like, well, why is there so much purchasing? Well, they had cash on hand to do it. The next thing is I want to go into Google just to see what their track record is for earnings per share and revenue beats. But times right now, you have to dig in a little bit deeper than that, especially when it comes to, are they growing not only their active users, but are they having supply chain issues? Because those macroeconomic indicators matter. And if you get one of these wrong, analysts will tank your price. I mean, and the biggest thing is guidance. So how do you look at active users? How do you understand what the forward-looking guidance for the company is? Because growth, right? You want to put your money into a stock that's going to grow over time. How do you know? I mean, you have to listen to the last earnings call. So that's what I do also. So I listen to the last earnings call, and this company has 0 to 3% growth for the next year. So a couple of other things that really stood out to me in the last earnings call was the company had a referral program, a high dollar referral program, and they were not able to retain people after paying this out. So it didn't help grow users, and active user accounts is very important for long-term growth. They need to relook at their onboarding experience, and they're evolving this onboarding experience. Supply chain delays and their privacy changes that will impact marketing and marketing spend. So the company continued to talk about how it was in its infancy stage, and you have to listen to the leadership team. So you can see there's some spikes here. If you take it into the 5-year chart, you can see that typically around this level where it's at right now, 1250, it does recover. So some people may be anticipating or decide to buy before the earnings. I would say don't do that. I also like to go through their SEC filings. And you can see it's just littered with, Form 4s, type Form 4s. And this is transactions, and that's that buying of the buyback of shares is what I think. Now, let me know in the comments below if you know more, but SFIX announces share repurchases, an authorization of up to $150 million. Now, in the UK, they could be doing more, but what I wanted to do is pull up Abercrombie & Fitch Company because I'm not familiar with retail and clothing brands. So I wanted to take a look at this and say, all right, what's happening with this company? Now, I'm looking at the charts and I can zoom out and I'm trying to understand, where it's sitting in relation to another company that does clothing. Now, of course, they're going to be very different. The next thing, I'm going to go and look at the financials. Now, this first one that I have here is SFIX. And I want to look at the income statement, and I want to see the total revenue. I want to see it steadily climbing quarter over quarter. I want to see that the cost of goods isn't so much that it's really causing them to not be able to lock any gross profits. And you can't just look at cost of goods sold by themselves. Once again, you've got to do a comparison with another company in the market just to understand how good or bad this is. And then you want to look at gross margins. And are they good or bad? So you can see gross margins are in the 40% range. So is that good? I mean, it sounds pretty good, right? 40% gross margins. So I go back to look at Abercrombie & Fitch. And down here, you can see that they have between 50 and 60% gross margins. And if you look at the gross profit, you can't just look at the cost of goods sold by itself because these numbers look very similar, right? By themselves, those red numbers look very similar to the cost of goods sold here, but the revenue isn't as much. So ultimately, the gross profit line is what you're going to want to look at. And the gross profit line is much stronger at the end of the day for Abercrombie & Fitch. And you can see that in the price. So hopefully some of that makes sense. There's just a few other things that I would say, this Form 4, you want to take a look at the codes in here. You can go on tip ranks and see where it's valued at. And of course, you want to get under that price. But what is going to cause analysts to come back and downgrade this, especially 11 are on hold, they're on the fence. We only got 3% growth. We've got additional supply chain issues over there. We've got 2 that are a sell. That could be a red flag. You pull up Abercrombie & Fitch, you can make that comparison. So the last thing that I wanted to do was I wanted to take a look at the code on their webpage to see who's working on it and if there's any errors, to see if they're running into any basic issues. If they're going to claim to have a lot of data scientists, according to their last investor presentation, then it looks like they've got 34 pretty major or 28 major issues in here, linking with Pinterest, linking with the Meta platform, and they just got a new CTO. So this is another red flag. And of course, I don't want to be unfair. So I want to go back to Abercrombie & Fitch or another website just to see the number of issues or the number of ones that are red exactly up here that are showing this is not stuff that you should be getting wrong. So there's just some red flags with this. I would not buy it running up to earnings, and those are my thoughts. And this is just a little bit of how to do research. If you're watching YouTube videos out there, they should be giving you some elements of due diligence that look similar to this and not just reading an article to you. My name is Randy. Thank you for watching. Be sure to like and subscribe, and I'll see you in the next video.